Hello, good morning, students. So today we are just revising the entire chapter business services, right? So in the last class we have completed the entire chapter. So we have done till this part, that is the yes, elements and the insurance services. Till this part we have done it. So as per your latest CBSE syllabus, this communication services is however excluded. Okay, so I'm skipping it for the time being. Okay, so whenever we mean services, we have to refer to any commercial firms, be it your companies, be it schools, any companies, be it your schools or banking houses. Whenever it provides any of its related services or allied services, then we can include that in our business services part. Okay, so these are some of the characteristics of services that we have learned, right, relating to its intangibility, that is it cannot be seen nor touched, right? That means it lacks homogeneity, that is services are always heterogeneous, right? That means it lacks a particular shape as that of your goods, and all these things we have discussed about the characteristics of services, right? So let us discuss about the business services. These business services, out of these business services, this banking services and your insurance services is important. This postal and telecommunication, including your warehousing and transportation services, are not there in our syllabus for the time being. Okay, so here you see under banking services, what is actually a banking services. Banking services definitions are given, various types of definitions are given as per the book, but you need to write only the banking definition that was given as per the Banking Regulation Act of 1949. Okay, so what does that act has given us? It means that accepting money from the public for the purpose of lending and investment. Okay, so this is actually the prime motive of a particular bank, which the Banking Regulation Act of 1949 has given to us, right? I suppose this you can understand. Next, we have also discussed about the various types of bank account. Whenever you go to a particular bank, you need to open an account. The first thing that they are going to do is they will be opening your savings bank account, right? This savings bank account carries an interest of 2.25% to 2.50%. I think till the amount of rupees 1 lakh you will be getting 2.50%. Till the amount of rupees 1 lakh you will be getting 2.50%, and after your the savings account crosses 1 lakh rupees, you will be getting 2.25%. However, this rate changes from time to time. Okay, next we have discussed about the current account, which is actually meant for your businessman's, this current account. Okay, under current account, there you will be getting no rates of interest, unlike that of your savings account. Then we have also got about recurring deposits account, right? Under recurring deposits account, a particular amount of money is deposited after a particular time for a fixed period of time, right? For example, if you want to deposit rupees 1000 after every week, then you can open a recurring deposits under that terms and conditions, right? Next, we have also discussed about the various types of banks, including your fixed deposits. Here, under fixed deposits, there is a particular sum of money which will be kept fixed for a particular time period, and within that time period, you are not allowed to withdraw that money. Okay, and under fixed deposits, you will be getting the highest rates of interest. Okay. Next, we have also discussed about the multi-option deposits account. Here, it will be carrying the characteristics of both your savings as well as current account. Here also the rate of interest will be higher than that of your savings account, but it will be less than that of your fixed deposit account. So fixed deposits carries the highest rates of interest. Okay, remember this. Okay, then we have also discussed about the bank draft. Actually, a bank draft, actually it is a draft or any bank instrument, we can say, which is drawn by one bank against another bank, right? So that we have also discussed about the banker checks. Actually, banker checks and bank draft is of similar characteristics, but this banker check is usually used by the people in the earlier times when this bank draft was not that extensively used. Okay, under banker check, you will be only able to use a particular instrument only within your locality. Okay, that is why it is also called your local bank drafts. Okay. So nowadays, I think in bank you will not be getting this banker check. Only I think it is applicable is your bank draft. Okay, I suppose this is clear to you. Next, we have also discussed about your overdraft facilities and also cash credits, right? Overdraft facility, you will be allowed to withdraw more amount than whatever is left in your credit account, right? Again, in the cases with cash credit, you will be also against your various mortgages or any securities, the bank will be giving you particular sum of money to withdraw more than that of your credit account, and that is also always for a fixed period of time. And next, we have also discussed about the various types of loans, right? Short-term loan, medium-term loans, and all these things we have discussed, right? We have also discussed about the various modes of e-banking. Most important thing is your national electronic fund transfer and the real-time gross settlement. So under national electronic fund transfer, funds gets transferred from one bank to another, but they are one of the drawback is that it is subjected to waiting time period. That means after a particular time or after a particular amount that the bank gets, then only the bank will be transferring the money from one bank to another bank, right? Next, we have also discussed about the real-time gross settlement. This is very easy. Sorry, this is very convenient. But here the minimum value is rupees 2 lakhs rupees. In the cases with your national electronic fund transfer, the maximum limit is 2 lakhs rupees. Okay, and in the cases with real-time gross settlement, the minimum amount is rupees 2 lakhs. Okay. Try to remember this, and here the bank will be transferring the money from one bank to another bank immediately whenever the banker clicks the submit button, right? I suppose you can understand the difference between the RTGS and NEFT, right? So I'm just repeating it. In the cases with NEFT, the bank transfers money from one bank to another subjected to particular time limit or subjected to particular amount limit. Okay, and here the maximum value, there is no minimum value. You can transfer rupees 100 also, 100 to 2 lakhs. Okay, and in the cases with RTGS, real-time gross settlement, you will be able to transfer the money starting from rupees 2 lakhs. Okay, here the money gets transferred from one bank to another bank immediately whenever the banker clicks the submit button, right? I suppose this is clear to you. Next, we have also discussed about the various insurance services, right? So the most important part is your principles of insurance. Okay, so under principles of insurance, the first principle is that the principle of utmost good faith. Here you should not be hiding, or the insurance company should not be hiding any facts that are hidden under them. For example, if a person is suffering from any contagious disease, then you should reveal it before taking a life insurance or before taking a health insurance. Okay, so in the same way, in the insurance company should also reveal the exact amount under which the person will be getting compensation. Okay, so here in the cases with utmost good faith, they should not be able to hide, they should not hide anyone anything from each other. Okay, next you see the principle of insurable interest. Under this principle, whatever insurance we do, that particular object or the person, both the insured and the insurer must have sufficient interest on it. Okay, for example, if I want to take my an insurance policy on my relative, the insurance company should know it. Okay, why I'm taking that insurance policy on my relative. Okay, in the same way, if I want to take a loan from the bank, then the bank manager will be evaluating the mortgage or the security value. Simply the bank manager will never give us money loan. He will be taking some mortgages or any other security value, and that security value should the bank manager has sufficient right to ask for insurance on that mortgage value or that security value, right? So these are some of the principles of insurable interest example. Next, we have discussed about the principle of indemnity. So under the principle of indemnity, actually the insurance company will be compensating to that much of the loss where actually we have suffered. Simply we cannot claim compensation because of the amount that we have paid to the insurance company. For example, if we have taken a policy of rupees 2 lakhs but our damage value is rupees 50,000, then we can claim compensation only to the extent of rupees 50,000, right? Next, we have discussed about the principle of contribution. That means what, if we have taken insurance company from insurance policy from more than one insurance companies, then all the insurance companies will be contributing the exact amount of loss that we have suffered. Okay, that is actually the principle of contribution. Next, we have discussed about the principle of subrogation. That means if once the insurance company or the insurer has given us the damaged value, then the entire value of the entire property of that is the entire damaged property goes to the hands of the insurance company, right? So then we have also discussed about the various principles of cause proxima. Cause proxima, that means the subject matter of the insurance must be mentioned in the policy. Okay, then and the last principle of insurance we have got is the principle of mitigation of loss. So under the principles of mitigation of loss, whatever we do insurance, we should take care. It is not that we are taking insurance so we can behave in any manner that we want. Okay, we should take care of our goods and services on wherever whatever we have taken insurance. It is not that we will be feeling that since we have taken insurance, so we will be behaving misappropriately. Okay, we should take care of the goods as if we in the same way as if we have not taken insurance on that subject matter. Okay, so these are the various principles of insurance that we have discussed. In the next video we are discussing about the differences between insurance and assurance, and also the elements of insurance and also the types of insurance. Okay.